India has been witnessing a rise in inflation rate. From oil to vegetables, the price hike has us worried. But how to deal with such a blanket rise in price? There is a steep rise in the cost of living, and that's due to wholesale inflation, which has surged to a record high of 14.5% in March. So with inflation, your immediate concern would be managing your monthly cash flow. It would seem easier to cut back on your savings, but hold on, because that could actually derail your long-term financial goals. Sit back, map your financial resources and prepare a tight budget. Of course, sticking to it might seem difficult, but you can do so by reducing discretionary expenses like buying an expensive watch or taking a trip. An expert said that savings and investments should continue at the same pace, even if that means you have to give up on a trip or two. Another way to cut down on your discretionary budget is by reducing your eating out budget. Changing to public transport or working from home could also keep you away from overshooting the budget massively. If you have not paid much attention to your expenses, now would be a good time to start. Look at your grocery list and regular expenses and check what impacted you the most. Inflation will remain a recurring issue even when you retire. And to quote an expert, it's time to invest and invest well. The real rate of interest in your fixed deposit has probably turned negative. A 5.5% annual interest on your FD against the inflation rate of 7% means that your weather is eroding. So what other ways are there? Maybe you should look into investing in stock markets, with expert advice, of course. It might seem risky, but equities tend to give higher returns in the long run, but do consult an expert. So experts are saying that to beat inflation, earn higher returns through investment in stocks. So are you ready to look in the eye of inflation and beat it?
For more informative videos like this, keep watching India Today Newsmo.